So, good evening, everybody, and welcome to a further update on Strix PLC. Earlier this year, I gave you a flying tour of our business, and today I would like to provide a bit of an update on some of our strategic initiatives and further detail on our growth plans. As always, I'm going to skip through the presentation relatively quickly so we can allow time for questions at the end. You'll also find a lot of supplementary information on our website at strixplc.com. So just firstly, a little bit of history for anybody who is still new to our story. Up until around 2017, when we listed on AIM, Strix was a bit of a hidden gem, a company based on the Isle of Man, whose controls are estimated to be used more than 1.2 billion times per day by consumers in more than 100 countries and by over 10% of the world's population. In fact, more than 70% of the people on this call use a Strix product every day, and we have a 55% global value share of the kettle control market. Our roots go right back to 1951, when Eric Taylor started Castletown thermostats based here on the Isle of Man. The core technology was in fact invented during the Second World War, and it was used to switch on heaters in flying suits to allow pilots to fly at a higher altitude. 70 years on, the same technology is still used today in appliances to protect consumers, and we continue to manufacture it here on the Isle of Man. In August 2017, we listed on AIM at £1, very much as an income fund, extremely cash generative, highly profitable, and with an attractive progressive dividend. Almost 4 years later, we have tripled our market cap to more than £640 million. And whilst we maintain our strong financial position and our dividends, we are increasingly attracting growth and ESG funds. And really, we've only just started, as you'll see. In October last year, we set out our 5-year commitment to double revenues. And today I will provide an update on the progress to those plans. You're starting with a little bit of an update on our current trading. So 2020 was a challenging year for pretty much all companies, but for Strix actually it was a very positive and pivotal year where we secured a modest growth in profit despite the pandemic, but really focused on key strategic initiatives that support our growth plans. Following that tough start in 2020, we experienced a very significant rebound, all of those people drinking tea at home obviously. And from May onwards, I'm pleased to report that strength continued right through until the first quarter of 2021, providing a very, very strong start to the year, particularly within the regulated segment of the kettle category, which is our most profitable segment. Of course, there are numerous headwinds such as commodity price fluctuations, logistics challenges, Brexit, and we have successfully implemented price increases on all of our legacy products in both the water and the kettle categories. And that, coupled with continued efficiency measures and strategic initiatives, will minimize any adverse impact for the year. We've seen new products launch within our water category, particularly from our most recent acquisition of Leica. And the Aurora product has just launched on Amazon under the Aqua Optima brand, and it's also launched in Asia under one of the leading global brands in the past few weeks. So you get your orders in quick if you want one of those. We have a very healthy order book, and I'm pleased to say our OEMs in China also have very good visibility, which provides confidence that we will achieve a revenue growth of around 30% this year, putting us well on the way to deliver that 5-year commitment. The Halo Pure technology that removes bacteria, viruses, and cysts from drinking water continues to be adopted by the livestock sector within China, and we now have 4 systems installed, with further discussions well underway to deliver that commitment of 10 systems this year. And the recent acquisition of Leica is also going well, delivering more than 20% revenue growth prior to the benefit of any synergies, with some excellent opportunities to cross-sell products between our various water categories. Our new factory in China is on track to be fully operational by August 2021, both on time and on budget, despite all of those disruptions last year, which I think is an excellent achievement by the team and will double our capacity to really support those growth plans over the next 5 years. From an ESG perspective, we are doing a lot of work to continue to enhance our position and our external communications. We have also committed to put out our long-term KPIs in September at our next roadshow following the completion of the new factory, which will have a very significant impact to the baseline. And we've also relocated our US office in Seattle, providing a much more appropriate environment to support the business as we increase focus on US sales within both the water and the appliance categories. This slide just shows the performance against our peer groups, although it's actually quite honestly, it's quite hard to find a peer to Strix. You can also see the comparison again against the AIM and the FTSE market since listing, with a share price growth of nearly 200%. Projections from the majority of the analysts that follow us now continue to be extremely positive based on that confidence in the growth opportunities. I'm not going to dwell too much on the financials because obviously these are the last reported financials, which were the end of the last year, but our absolute gross profit held relatively flat versus last year, gross profit margin increasing by 50 basis points to 41.4%, which was really supported by a strong product mix, operational efficiencies, as well as the addition of Leica, particularly strong in the regulated markets as well. The adjusted EBITDA increased by 3.2%, again with that margin improving by 1.8 points. And that really reflects the highly flexible variable cost base we have, along with our continued improvements in operations and the automation that we're putting in. The PBT reported a 2.4% increase, which again was well ahead of our capital markets day projections. Net debt reported at 37.2 million showed an increase of nearly 11 million, which was primarily due to the funding of the acquisition of Leica. And the board was very happy to be able to approve a dividend with an increase of 2%, aligned to our underlying results and in line with our progressive dividend policy. If we then look at our capital allocation slide, you can see the group has 4 capital allocation priorities. And during the last year, we have been very prudent in allocating those funds to 3 of the pots, which were CapEx for expansion of the operations and automation, obviously the acquisition of Leica, and the progressive dividends. We didn't pay down any loans last year, but we will continue to deleverage with any excess cash. Clearly, as we've now almost completed the factory, we will start seeing that go back to normal, where we have a cash to EBITDA ratio of around 70 to 75%. Our growth plans communicated at the Capital Markets Day were based on organic growth, but clearly we will continue to seek appropriate acquisition opportunities, which will provide some potential upside to those targets. So now let me just have a quick look at some of the key strategic initiatives, starting with the factory. As I stated, everything very much on track with our team in China doing an outstanding job. And just to prove it does exist, and assuming technology still works, I have a very short video here which will actually show you the progress made up until mid-May. And that probably explains more than me trying to explain it, so bear with me. So hopefully you've got the presentation back on the screen and you can sort of see the progress being made. So we're really excited about the new factory. Product approvals will be completed this month. The ISO system will be completed in July, and we'll have solar panels across that roof in October to support all of the production lines. So very much on track and to the original schedule. Looking at Leica, an acquisition we made at the end of last year. Again, as discussed, the integration of Leica is progressing extremely well, and we have now seen 3 new products launched in the first half of this year with the Leica brand name. Strategically, Leica is a very important acquisition for Strix. It provides growth in both the water and the appliance categories, as well as a footprint in Europe to supply products made in Italy, destined within Europe, thus avoiding potential issues and tariffs related to Brexit, which is obviously a very common topic at the moment. Leica performed extremely well during the pandemic, and with 20% growth year to date and very, very strong roadmap of new products, it continues to provide significant long-term opportunities for the group. Another key initiative for us is also on the ESG side. Strix has an excellent ESG proposition with a product portfolio that significantly reduces energy, it removes viruses and bacteria and cysts from water, and also reduces the amount of single-use plastics with its filtration range, so perfect product set. ESG initiatives within the company are driven by myself to provide the appropriate gravitas within the business, and we have a dedicated PLC board committee as well, led by Richard Sales, our NED, to ensure it remains in focus at board level. We continue to enhance our position in this key area and have committed to put out a clear set of KPIs in September once the factory has opened, as this will, as I said before, significantly impact in a positive way our baselines. Our business is very much driven by standards, and we have gained benchmark status in the Isle of Man facilities for ISO 9001 for the last 2 years, an award we are told by our auditors is achieved by less than 2% of companies. We are looking to adopt ISO 5001 energy management in China this year, and we will also implement a range of standards into Leica to bring them in line with the rest of the group. We're also doing a lot of work on the energy management, and we'll set clear and aggressive targets to achieve a net zero status that will be communicated in our September roadshows. We're also working on a number of initiatives as part of our Lean Initiative program. Program that's driven by employees to reduce the use of plastics within our packaging, and also working with our local communities on further environmental initiatives. There's additional information on our website with a dedicated sustainability section now included as well. So I regularly get asked how we will achieve that 100% growth. So I'd like to spend the next few minutes on each of the categories just to explain why we are so confident in our projections. I'm going to start first of all with the kettle market. Here we're looking to grow by around 3% CAGR in a market that grows 2 to 3% per annum. So quite modest growth in fact. We have a global market share of 55% and we'll look to gain a further 2% in the remaining 4 years, having gained 1% last year in the pandemic. This segment for us really is business as usual. We've sold more than 50 million of the U9 range since its launch in 2018, and we're now working on the next generation of controls to further enhance our cost position and reduce the amount of commodity materials being used while still increasing the specifications. Currently, only 40% of households around the world have an electric kettle, so there's plenty of room for growth, with our key focus being on the US, where there's only 14% household penetration. We have more than 75% of that market share. India, just 10% penetration. China, 40% penetration, and we have around 46% of that market share. And also Russia, which is more of a share gain position given the competitive products we now have available in our portfolio. When you look at the roadmap, you can see we are continuing to use technology and our sophisticated automation to continue to reduce the size of the controls, reducing the costs, but also the use of commodity materials. This also makes it much harder for our competition, who generally do not have that same level of automation and technology, and we continue to patent our technology and move the goalposts to maintain our market lead position. In addition, we're looking to adopt some disruptive technologies within the market, and we will in fact launch an induction kettle towards the end of this year under the Leica brand. Moving to the water category, following the acquisition of Halo Source and Leica, we have a very comprehensive range of products and a strong roadmap of new products. Our growth aspirations in this category are 27% CAGR, which seems quite aggressive at first sight, but the point of use market itself has a double-digit growth, and the addition of Leica and Halo Source provides an immediate 10% growth before any synergies. Our focus in this category will be to maximize the cross-selling opportunities between the various brands we now own, and also to leverage on our geographical presence to establish a strong position in both China and the USA, and to be the clear number 2 player within that point of use marketplace. Looking at the products, we have an extensive range providing products for the at-home category, on the go, as well as commercial systems using that Halo Pure technology. We have a highly experienced research and development team and a very strong new product roadmap in a segment that really does not have that much new innovation. The commercial system itself has attracted significant attention for the farming sector in China, with the government trying to reduce the amount of antibiotics being used within farms. And this technology provides great opportunity, providing the market, with some very unique characteristics to give safe drinking water to animals in all of the farms. So I think, very much a conservative number we've put in our plans for that Halo Pure technology. And finally, on the appliance segment, an area I'm particularly excited about. Here again, we are seeking about a 25% CAGR growth, albeit from a very low base. Our growth is supported by the acquisition of Leica again, that brings a wide set of appliances within the health and wellness category, but we're also looking to expand significantly with our instant flow heater devices, a patented energy efficient technology that provides true boiled water in seconds without any preheating. If you look at the roadmap, we will be launching a range of hot water on demand and beverage appliances, both with our own brand and with global brands as our partners, as well as further expanding our offerings into the baby care segments, food preparation, and the health and wellness segment. The technologies for all of these products are already available, and we have a strong roadmap of new products for the coming years that fully support our 5-year plans. And to be honest, we would only need to have a few of those appliances to gain traction to deliver on that commitment within the appliance segment. So hopefully you will see that Strix has a very compelling investment proposition with some really exciting new products on the way and initiatives that will secure our growth objectives. We have delivered growth during the pandemic whilst continue to invest in strategic initiatives. We have a high quality, resilient and very robust business that benefits from both geographical and product diversification, and we're certainly poised for growth with some compelling opportunities. We have a very solid balance sheet and low leverage, providing financial flexibility to navigate headwinds and to deploy capital consistent with the allocation of our capital priorities. And we remain totally committed to an attractive progressive dividend policy that reflects the board's confidence in the outlook of the group going forward. So in summary, we are ready and well positioned to maximize our opportunities as we emerge from the pandemic, and we intend to realize our full potential delivering our 5-year plan. And with that, I'll pass back to Roland for any questions.
So kicking off, there's been a lot of very positive broker and analyst coverage in the last few months, and you're one of the larger companies now on AIM. Would there be any benefit of moving to the main market?
It's something we've discussed a few times. I think at the moment we're very comfortable on AIM. We've been here just under 4 years at the moment. We also we still attract a lot of IHT funds here on the Isle of Man as well. So it would change our investor base quite significantly if we move to the FTSE. So I think in the short to medium term, we're very happy on AIM.
Okay. Are you likely to make any more significant acquisitions in the year or two? If so, in what business or product offerings or areas?
Yeah, acquisitions is a question I get asked a lot, and I think the numbers we put out in Capital Markets Day excluded any acquisitions. I would be extremely disappointed if we didn't make acquisitions during that period. We will be focusing on areas such as the water filtration still, or into some sort of heating type technologies, maybe beverage side. We'd be looking for an acquisition we can make primarily through our own cash flow. So we'd be looking at a company probably up to about a £60 million purchase. We certainly wouldn't be looking to raise any significant funds given our cash position.
Okay, next up, what percentage of all products are manufactured in China?
All of the products are assembled. So primarily the kettle controls is the biggest part of our business today. That represents 85% of our revenues. All of those are assembled in China. We have manufacturing here on the Isle of Man as well. We make over 640 million components on the Isle of Man every year with just 38 people. And they are really the key technology, the blades, the contacts, which are then shipped to our China factory for the assembly side. So still the majority of assembly is done in the China side. Obviously now we also have the factory in Italy with the acquisition of Leica, which today is around 10% of our products with having purchased Leica.
Next up, can you define true boiled water delivery? What do these instant hot water taps deliver?
They vary, and so it's very hard to sort of give you an exact answer to that question. Our system is very, very unique. It actually boils the water before it's delivered, so it's true boiled water, as we say, coming out of the system. A lot of the systems on the market today are very hot, but they don't actually get to that boiling temperature. And also, they tend to hold a lot of hot water under your sink in a tank, normally kept somewhere around 65 to 70 degrees, such that you can get the water out quickly. And some of them also use some form of air system to actually drive that water out. So the technologies are quite different, whereas it's taking room temperature water from a tank, and it will convert or start giving you true boiled water in just 5 seconds.
I know there's a few colleagues who are avid tea drinkers in our office who don't approve of the temperature of the hot water that comes out of our hot water tap thing there. What's the one initiative that you're most excited about?
Oh gosh, that's hard to put down to one. Obviously, we're excited about the new factory, but I think the appliance side is really starting to get some traction, and the new Aurora product, which is literally just launched on Amazon, I think is really interesting. So that's a water station that gives you everything from chilled water to boiled water, everything in between, and starts giving you that boiled water in just 5 seconds. I think that will be a really popular product, and as I say, literally just being reviewed on Amazon in the last couple of days.
Lovely. Next up is about sales in different regions. Could you just talk through a top line overview of where the sales are, and then a comment on growth in both USA and China?
So I think the sales is always quite difficult for us. So we actually sell most of our products. Bear in mind that most of our revenue today is kettle controls. We sell the kettle controls to a China-based OEM that then sells the finished kettle product to around 105 countries around the world. So most of our sales are into China, but then those products go on to brands all over the world. With respect to America and China, America is a really interesting growth area for us today. Kettle's only 14% penetration, but growing very fast at the moment. We've got a wide portfolio of water filtration products now, so we're certainly going quite aggressively into America with the water filtration side. In fact, we had a big program launch on today, one of the sort of TV channels, and sold out within a couple of hours on that channel as well. China itself is slightly different. At the moment, that's again primarily kettles. We have a 46% market share in China, which I think is quite unique for a Western company. Clearly, we're looking to maintain or grow that to sort of around the 50-52% as things continue. But we're also looking to take some of those appliances into China as well.
Thank you. And I think we've got time for one more. And you mentioned the dreaded Brexit word. And focusing on the production capability in Italy, what does that allow you to do?
Italy has a fully automated production line for the Leica filters. So all of the Leica filters can be built in Italy and then sold anywhere around Europe. It clearly also gives us a footprint to be able to stock or hold other products in that factory as well, and then ship them into Europe as well. I mean, as we go forward, we will look to continue putting more and more of the local filters, the European filters, into that Leica factory.
Lovely. All right, Mark, thank you very much for the update. Really appreciate you joining us tonight.
Thank you very much for your time. Thank you, everyone.